Hey there, welcome to the Guaranteed Retirement Guys show. So, today I want to talk about the difference between an annuity and a pension. So, what is the difference between an annuity and a pension? Well, not much. A pension is guaranteed income, right? Guaranteed income from your pension might mean that you're taking income at a certain rate for the rest of your life. And if you die, then maybe your spouse gets 50% of it. Okay. Or if you set it up where you're taking a lower amount of income in return for that income continuing and not being reduced if you were to pass away, then you have that. Really, it is a guaranteed annuity. That is what a pension is. It's much like Social Security. Social Security is just a big giant annuity. Okay. It's guaranteed for the rest of your life. That's guaranteed for the rest of your spouse's life if they have theirs. And so it's just it really the difference is do you have a pension? And if you don't have a pension, do you want one? Do you want to purchase a pension? Because that's really what you can do with your 401k, your IRA, or any other tax deferred account. You can take that money, put it in another IRA with an annuity contract inside of it. So now you're purchasing a pension, which is awesome because when people are thinking about uncertainty and they're seeing their stock accounts change and fluctuate up and down and they want out, right? And so this gives you a chance if you're looking to have a pension, then you can do that through an annuity. And there's a lot of annuities out there. I mean, I look at hundreds of these. You've noticed in the description below this, you'll see a link where you can actually book a call with me and I'll look at these annuities for you. I'll break down which ones are the best ones. It really just depends on what you're looking for. But if you're looking to, have your own pension, maybe you want multiple pensions. One thing that my clients like to do is they like to ladder annuities. Ladder annuities is, I would say, the easiest way to explain it is you buy three annuities, or two, or four, or it doesn't matter. It's just more than one. Okay, and so you're buying all these annuities at the same time. And your plan is to trigger the income at different points in your life. So maybe you're 60 years old and you want an annuity that will pay you right now. And then you got another annuity that will start paying you in 5 to 10 years, which is a much higher amount. And then you have an annuity that will pay you 20 years from now. You can just keep triggering the incomes, which is great because people can do this for long-term care needs as well. It's nice to have that so that if you think you might need the income later on to beat inflation or to have long-term care covered, things like that, these annuity contracts will do that for you. And it's like purchasing multiple pensions. And when those pensions are triggered at multiple timeframes, they give you much, much higher payouts. So it's pretty cool because you cannot do that with a normal pension. Typically, it's just one pension and you turn it on and that's it. With annuities, you can buy multiple pensions and multiple streams of income, multiple guarantees, and you just have mailbox money. You have money that's just coming in nonstop every single month. And when you have that, you have peace of mind. And so that's really, to me, there is no difference between an annuity and a pension because an annuity is a pension. And typically, if you're putting money into an annuity, you're getting 2 to 3 times the amount that you put in income because the insurance company has to guarantee that for the rest of your life and the rest of your spouse's life. So it's a pretty great deal for you. Insurance companies, though, they're smart because they've got life insurance and they got annuities. Okay, life insurance pays out if you don't live long enough. Annuities pay out. They're designed to protect you from living too long, right? And so they balance each other out. Annuity companies aren't trying to be hedge funds. They're not trying to make tons and tons of money. They know their numbers and they know the mortality tables. And so they're able to give you those guarantees and they're able to protect themselves, make a profit, but at the same time, give you what you're looking for, which is guaranteed income. I mean, really, that's the whole reason we have our 401k accounts, our IRA accounts, is for income, is for our retirement. And not only that, we want a retirement we cannot outlive. And that's the beautiful thing about pensions. Pensions are designed to pay out for the rest of your life. They provide peace of mind, knowing that it's always going to be there. It's mailbox money that never runs out. An annuity is the same thing. You just buy a pension or two or three, trigger the income streams whenever you like, and you have those guaranteed pensions paying you. And so it's a beautiful thing. If you want to book a call, click on the link below in the description, and we'll sit down for 30 minutes. I'll show you a bunch of annuities. I have access to hundreds of them, but I'll show you the top ones. Okay, we'll look at your age. If you're married, we'll plug in those numbers as well, and it really kind of depends on the state. I mean, I go all over the U.S. And so really depends on your personal situation, and we'll filter out the very, very best annuities. And we'll look at the payouts, look at the growth. Of course, they all offer market protection, which is phenomenal. And look forward to working with you. I'm not going to try to sell you anything. Just happy to share the info. And if you find value in it, then I'm happy to help you with it. If not, we'll part as friends.